Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome back to the analysis of the Forex market, the euro currency. Particularly speaking, on the daily time frame, in fact, it's not much to comment. We see that just a high wave pattern on the right below the significant area of resistance that we have discussed yesterday. So that is highway, some bar candle with the long-standing shadows right below significant level. This is the 618 resistance from that swing. It's also monthly pivot points, gold line, and red line is the weekly pivots resistance 1. So currently market, we could say that market still stands in decision, since as downward scenario could happen as upward scenario. On the side of the upward scenario, trend is standing, because on the weekly time frame trend is bullish, on the daily time frame trend is also bullish. On the bearish side, otherwise we could see this could happen some kind of the head and shoulders pattern that could trigger some movement to the downside a bit more by this ABCD pattern. So depending on how market will behave in that area will depend all further price action. So if market will break this level to the upside and erase the possibility of the head and shoulders, then probably, as we have suggested yesterday, we could rely on this A, B, C bottom weekly pattern with the target at minimums above this highs around 135. Ultimately, this ABCD pattern will give us the 137 level inside of the monthly complex resistance. Well, on the 4-hour time frame, what we see? Yesterday we said that probably market should retrace a bit lower based on the trend analysis. So we said that since trend on the daily time frame still bullish, and it will remain bullish even if market will show some deeper retracement. This deeper retracement is precisely what we expect, because if you could see, this move is rather not tremendous but still significant move to the downside. That's why this is the first jump from that level, from that swing to the downside, and retracement should be a bit deeper, I suppose. And personally, I will wait for some 50% retracement from that swing, or even 618 right to the weekly pivot point. On the 4-hour time frame, precisely, we could see these levels. That's level that we have discussed as confluence support yesterday. Market has touched it again. By the way, it has touched it during the previous swing to the downside also. Here could appear some kind of the head and shoulders shallow pattern on the 4-hour time frame, and this could lead to some downward continuations. A, B, C top, 100% extension stands precisely around the 50% support of that swing to the upside. So you can see this target's around 131-137 of that ABCD pattern. Well, that is the moment that also could be monitored by market participants, since it could give not bad opportunity to try to enter the long side of the market if market will still try to continue move based on that pattern. Because this pattern we could also treat as initial swing, ABCD retracement, guardedly triple to buy pattern, retracement right to the 50% support. This is absolutely normal ratio for that kind of patterns, and respect of that level, and continuation to the upside. So we will try to enter on the continuation of that swing if you would like to play on the long side of the market. Also, why this level is interesting, since this is not so weak level. So this is kind of agreement, because the target of the ABCD pattern coincides with the 618 support of that swing from that low to that high. Also, it's approximately 50% support of that swing. So market probably will respond will respect this level somehow. Well, and that will let you to move your stop to the break even. So if you suggest market shows ABCD pattern, you enter long here, market shows respect of that level, you move stop to the break even, and if market suddenly continue move to the downside according to the head and shoulders pattern on the daily time frame, well, your position will be safe and you will lose nothing. That's why the significant areas and supports is very attractive from the perspective of the entering with the, we could say, risky positions. Well, on the hourly time frame, we see this butterfly pattern that we have discussed yesterday. That was the 127 butterfly. Market has shown retracement right to the confluence support on the 4-hour time frame. You can see that hourly trend currently stands on the bullish side. That kind of price action looks like more as a retracement rather than as the thrusting move right from the support level. That's why I suggest that this is just a retracement, and now market stands below the 618 resistance of that swing. It makes me think that probably we still see at minimum the ABCD move to the downside. Well, this is the thrusting price action. Shallow retracements, nice thrust to the upside. But that one looks like still the retracement rather than the continuation to the upside. Well, what kind of conclusion we could make based on the current situation? If you have the bullish view on the market, you could act twofold. The first scenario is the safer one, is to wait the breakout of that level and erasing of the opportunity of this head and shoulders pattern on the daily time frame. If market will continue rise above this level, then probably we could say that that pattern has been cancelled, and you could try later to enter on some retracement from that, reestablishing of this swing of by this pattern A, B, C, D. That is the safer way. More risky way is to wait this A, B, C, D move and try to enter from that level that we have just discussed, is around 131.40. It's right here. Why is it more risky? Because this price action could be due to the head and shoulders pattern, and market could show really deeper move to the downside by this A, B, C top pattern, A, B, C, D. So you will be traded against the major move on the market. But still, since this level is rather significant, then we could count on some pullback from that, at least shallow pullback on the hourly time frame, for instance, and that will let us to protect our position by this moving the stop loss to the break even. That is what should be done around that level, because it's really could be treated as the potential continuation of that pattern, since this idea is supported by trend direction. If you have the bearish view, well, then your attention should be attracted to this head and shoulders pattern, and maybe to opportunity to trade this pattern on the downside, in downside direction. But personally, I still think that I still wait for this opportunity to enter on the long side of the market at this level, because current price action on the daily time frame it's not very impressive from the bearish perspective, at least currently. Well, we will see. So that's our current view on the market. Look at your preferable scenario and look at the levels that we have just discussed, because currently market provides us with the different and a lot of different opportunities to trade, as on the bearish side of the market, as on the bullish side of the market, depending on your view on the current situation. Well, good luck to you and see you tomorrow.